Hello everyone, welcome to Money Wisdom channel. In this video, we're going to talk about retirement roadmap ages 20 to 30. If you are new to this channel, do like and subscribe to the channel. Retirement may seem like a long way off, but it's never too early to start planning for your future. If you're in your 20s, you may be thinking about your career goals and how to best achieve them. But the retirement roadmap for ages 20 to 30, you should also be thinking about your retirement savings. The sooner you start saving, the more time your money has to grow. If you like this video, don't forget to like and subscribe to the channel. There are a few retirement roadmap ages 20 to 30 key things you can do in your 20s to set yourself up for a comfortable retirement. First, in your 20s, take advantage of compound interest. Many people in their 20s think that retirement is a long way off and that they don't need to start saving for it just yet. However, there's one important factor to take into account: compound interest. Compound interest is interest that is earned not only on the money that you have invested but also on the interest that has accumulated over time. In other words, it's interest on top of interest. The earlier you start saving for retirement, the more time your money has to grow through compound interest. For example, let's say you invest $1,000 in a retirement account that earns an annual rate of return of 7%. After 10 years, your investment will be worth $2,145. But if you wait just 5 more years to start saving, your investment will be worth only $1,610 after 10 years. So even if you can only invest a small amount of money each month, it's still worth doing. It may seem like a pain now, but you'll be thankful for it later when you have a comfortable retirement fund. So take advantage of compound interest and start saving for retirement today. Next, avoid credit card debt. Any discussion of retirement planning must include the discussion of debt. After all, one of the key sources of stress in retirement is finances, and debt is a major factor in financial stress. Credit card debt is especially problematic as it can have high interest rates that make it difficult to pay down. As a result, avoiding credit card debt is part of the retirement roadmap age 20. There are a few key ways to avoid credit card debt. First, live within your means. That means only spending what you can afford and not using credit to make up for shortfalls in your budget. Second, pay off your balance in full every month. This will help you avoid interest charges and keep your debt level manageable. Finally, use cash or debit instead of credit whenever possible. This will help you stay within your budget and avoid adding to your debt load. By following these simple tips, you can avoid credit card debt and enjoy a stress-free retirement. Then, maintain a healthy credit score. If you're like most people, you probably don't think much about your credit score. But the truth is, your credit score can have a big impact on your financial future. If you're planning on retirement, it's important to understand how your credit score can affect your ability to retire comfortably. Basically, your credit score is a numerical representation of your credit worthiness. The higher your score, the lower the risk you pose to lenders. This means that if you have a high credit score, you're more likely to qualify for favorable loan terms, like lower interest rates, and this can save you a lot of money over time. So if you're working on your retirement roadmap, make sure to include steps to maintain a healthy credit score. It may not seem like a priority now, but it can make a big difference down the road. In your 30s, you have to boost your additional income streams. No matter what your age, boosting your additional income stream is always a smart idea. And if you're age 30 or older, it's especially important to start thinking about retirement. While you may have a 401k or other savings plan in place, supplementing that with additional income can help ensure a more comfortable retirement. There are a number of ways to boost your additional income stream. One option is to invest in real estate. This can be done by purchasing a property outright or by investing in a real estate investment trust or REIT. Another option is to start a side business. This could be anything from running a small online store to providing consulting services. Whatever path you choose, boosting your additional income stream is an essential part of the retirement roadmap. Afterward, increase your retirement contributions. If you're in your 30s and just starting to think about retirement, you're not alone. This is the time when many people begin to focus on their long-term financial goals. And one of the most important part of the retirement roadmap is increasing your retirement contributions. Even if you've only been saving for a few years, it's never too late to start increasing your contributions. If you can contribute an extra $50 per month, that's an extra $600 per year that will go towards your retirement. And while it may not seem like much, those extra savings can add up over time. So if you're looking to get on the right track for retirement, increasing your contributions is a great place to start. Then, continue to live within your means. If you want to retire comfortably, continuing to live within your means is a must. That's because as you approach retirement age, your income will generally start to decline while your expenses begin to creep up. By continuing to live within your means throughout your 30s and 40s, you can help ensure that you have the resources you need to maintain your lifestyle in retirement. Of course, living within your means doesn't mean sacrificing everything you enjoy. Instead, it's about making smart choices with your money and being mindful of your future needs. For example, rather than buying a new car every few years, holding on to your current ride for a few extra years can help you save a significant amount of money. Similarly, eating out less often or cutting back on other discretionary expenses can also free up additional funds to put towards retirement savings. Making wise choices with your money now can pay off handsomely down the road. So if you're serious about retiring comfortably, continuing to live within your means is an essential part of the retirement roadmap. As we all know, retirement planning is important. The sooner you start, the better off you'll be. But what happens if you don't start early enough? Or worse, what if you don't start at all? If you don't start retirement planning early, you could end up in a very difficult situation. You may not have enough saved up to cover your costs, or you may have to rely on family and friends for support. Either way, it's not a comfortable or worry-free situation. However, if you do start retirement planning early, you can avoid all of that worry and stress. You'll have plenty of time to save up, and you can make sure that your money lasts as long as you need it to. So take the time to plan for your retirement now and enjoy a worry-free retirement later. Thank you for watching. I hope you have learned something from this video. If you like this video, do give us a like, subscribe to the channel, and comment down below. Thank you and bye!